What do you mean by not deducting mileage on your vehicle? Is this, in your experience, how many people don't do this?
So most everybody misses this. Now, let me be clear, just to kind of spread what is on the slide here, is that we're talking about when you use your personal vehicle for business purposes. So if you have a vehicle and you've titled it in your business, then you're not going to be able to take mileage on that. But when you're self-employed, you're filing a Schedule C and you're like, well, I don't have a separate business name. I don't have the business that owns this vehicle. Well, then you're obviously taking mileage. The mileage right now is something that changes kind of with the tide a little bit. But right now, I believe it's 60.5 cents a mile. It's usually, let's just say historically, it's always been over about 50 cents a mile. So let's just think, if in a year you drive 1,000 miles on your personal vehicle, that's $500 that your business could have paid you, and it's not taxable to you, and it's deductible to the business. So it's like the best way to get money out of your business, which is tax-free to you, but a deduction to the business. So all you're really now trying to determine is, well, how much of my personal vehicle am I using for business? And now that people are working at home, many people don't know this, but if your primary office is at home, and I don't just mean like wink, wink, I work at home, right? If your primary office is at home, and there's a lot of different tests to determine your primary office, and it's a lot easier than most think. Your mileage starts, if you have a personal vehicle that you're using for business, the second you leave your driveway or the street and head to the client or to the bank or to the post office. That's not considered commuting. If you have another office that you go to, then that mileage from your home office to the next office is not considered commuting. When people talk about the commuting, they're talking about rules that are for employees, and it's rules that are related to Form 2106, which is unreimbursed expenses for employees. When you're a business owner, when you're self-employed, when you own your own business, you're not following, because they don't apply, these rules that are for employees that come down to this commuting. You're following a separate set of rules. It's just what I'm telling you. And so you're then leaving money on the table. And at the end of the day, someone would usually ask as a follow-up, well, when should I title my car in my business, or when should I actually take actual expenses? And I'm just saying, rule of thumb is, if you have a vehicle that weighs over 6,000 pounds GVWR, which is gross vehicle weight rating, which is what? Trucks and SUVs. That you're able to, under current times, get up to 100% deduction in year one, regardless if you financed it or not. That might be the real time to think about, do I want to take actual expenses and actual depreciation? What I tell my clients is, if you have a vehicle that's 6,000 pounds or less GVWR, we want to do this mileage thing. And it's just something where people are leaving the deduction on the table. And you know why? They say, well, I don't want to track the miles. I mean, so you don't want a $500 check on 1,000 miles that's tax-free to you in a business deduction? When you put it in those terms, they're like, okay, the last thing I'll just note is, yeah.
And it's a lot more money than that, because if you're driving for work, you're putting 1,000 miles on in a year, right?
Yeah.
I mean,
Yeah.
this is real money.
Yeah. And I was just going to say, the IRS actually only requires you track it 3 months out of the year, then you can use it as an average for the remainder 9 months.